In this video, traders, I want to talk about the subtle difference between stubbornness and confidence in your trade. Stay tuned. Hey guys, warm welcome to you. So, what's the difference between stubbornness and confidence? So, we talk about this so many times, like you've got to have confidence in the trade, but it's easy to step over that line into stubbornness. It's easy to step over the line into cocky stubbornness. Hey, I'm going to do this no matter what, and that doesn't serve you. So where's the line? Where's the balance? What's some of the things, the internal dialogue that we talk about in our mind in the trade that might indicate that we're just stepping over that mark a little bit too much into the stubborn territory? So stubbornness is, let's use an example that you think a stock or a market or a currency pair, whatever, is going higher. Okay, or let's forget about stubbornness, that's what you think. And a stubbornness is, this is going higher. It's simply going higher. I'm right, I'm going to take the trade. A confident trader says, okay, I think this is going higher, but I have a stop if not. How many times have you heard of, maybe you've done it yourself, made this mistake, people taking a trade and have no regard for risk? They think, listen, this is going higher, I don't care whether it goes lower, I'm just going to hold it. From a trading perspective, there's no point in it going 1,000 pips higher if it's going 1,500 pips lower first. You're just not in, there's no point in trading, no point using leverage, you're kind of missing the point. And so, when you're stubborn with a trade, you've got this idea, like whatever, it's stubbornness with the market and with that particular asset that you're trading versus confidence, which is, I've got an idea, I've got a trade idea. I think this market's going higher. Whether that's fundamental, whether it's technical, it doesn't really matter. I think it's going higher. However, I have a stop or I have a place that I'm going to get if I'm wrong. Now, of course, if you're on a higher time scale, fundamentals, you may not have an actual stop loss from a price perspective, but you can be sure, guys, that if hedge fund managers are buying something on fundamentals and those fundamentals change 2 years' time, they'll be dumping the stock. You're not just going to hold out of stubbornness because they think it's going higher. If the story behind the reasons and the thesis and the justification for the trade changes on that level, fundamental, they're out. So why would it not be the same on a technical level? If you're a technical trader, if the technicals change and it turns into a downtrend, why would you still be in it? It's the stubbornness of the market. Now, of course, we don't want to go the other side of it. We're coming out a slightest little wobble. It's confidence that it's going to yield the results that we want over time, but it's not being so dogmatic and so stubborn about it that you're not taking new information on and reassessing at regular intervals. Another thing, kind of the self-talk is, I'll move my stop, I'm right. Market's coming lower, I don't want to get stopped out. I know this thing's going, it's going high. It's just a little bit of noise, this. We know that's the stubborn trader, whereas the confident trader says, hey, I'll put my stop in a place where the idea is wrong. So the idea, let's say first pullback, pulling back starts to go again, you might go long, you might have a stop kind of 50% of the move and say, hey, if it comes back there, it's not really an aggressive pullback pause type trade, it's more of a bigger unwinding, maybe I've got it wrong. And you're quite happy to be stopped out. And listen, nobody likes to be stopped out. We all prefer to have money coming in. Of course we do. Let's not pretend they don't. But you're quite comfortable with big stops. Okay, that's the idea. The trade idea is this. A stubborn trader says, I don't have any regard for risk on this. I don't care, I'm coming out. I'm just taking the trade and I'm going to hold it no matter what. And even if it goes up, great. But if it goes down to almost zero first, I'm holding it. I just will not be shaken from it. And you're losing not only obviously the potential capital for a trade that completely goes against you, especially if you're trading leverage, you're going to get margined out, but the opportunity cost as well. Now, there's a fine line. Again, there's a grey area here of constantly churning your account to try to find new opportunities and missing out and not letting a trade mature. That's different. But if you're just holding something because you believe for whatever reason it's going high and you have no way of reframing that and changing your mind, then you could find yourself in that stubborn camp. It's confidence in the setup, in the approach, in the style, yet not being stubborn with that specific market. Final thing might be this: I don't care where I get in, it's going down. If you imagine if you're checking a short trade, I'm just kind of being a bit fairer to shorts here at the moment. Versus, I need to find a good entry to ensure my risk reward is healthy. This is confidence in the strategy. It's like, okay, because to be fair, guys, direction isn't that hard to get right. Let me measure that slightly. The direction, if you're trading an uptrend, you basically say this market's going higher. Now, the hard thing is how low it goes before it continues higher, obviously measuring when it's stopping and deciding when the trend is ending, but direction isn't so challenging But for a leverage trade, if you're trading on margin, you have the challenge that you have to be more accurate because, of course, you have a stop loss, so you have risk, you have much more risk. You can't stomach so much drawdown. And as kind of retail traders as well, we're not interested in investing and going, hey, I'm putting money in there, it's going to be there in 5 years' time. We're interested in taking as much as we can from the momentum, from the kind of shorter term moves. So it's a different perspective. But, for a confident trader, it says, listen, I think this market is going higher. Likely we're going higher. All the attributes are right for it, blah, 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 good trend, good underlying environment, or whatever it may be. But I don't want to express this trade until I can find a good place to enter the trade with a reasonable, sensible stop loss. Because otherwise the risk-reward ratio of the trade is just skewed, and I may as well just take any old trade. If I've got to have a massively wide stop loss under that kind of multi-month low, and my target might be to double, and that's kind of halving. Yes, I know it's going to be 2 to 1, but it's not enough. Whereas the kind of stubborn traders don't care, get in, it's going down. They don't think about, hey, where's my stop loss going to be? They don't think about the idea and then how to express the idea. When you listen to a lot of interviews with hedge fund managers and kind of great traders from the Market Wizards thing, a lot of what comes across is, hey, we have this idea, comes across our desk, and there's normally a macro theme. We have this idea, but we couldn't find a way to express it in a good way. Now that's their way of saying we couldn't find a way of trading it where we had a good risk-reward ratio. Now for us as retail traders using technicals, it's a stop loss. For them, it's like, okay, where's the risk on this? The risk is this could do this, the currency. Okay, I couldn't find a way of expressing that trade that had a sensible risk with an asymmetrical risk reward, so a really good reward. And you've heard that many times, and so they try to find, now that's different for us, technical perspective, but they're trying to find a vehicle or an asset or a way. Are they going to the currency? Are they going to the stock? Are they going to a specific equity? Are they going to an ETF? Are they going to a bond of that country? How are they going to express the idea of growth or implosion or whatever it may be, and in a way that they can get that good risk reward ratio? Is it an option? Is it this, is that? So thinking about this, guys, thinking, okay, being stubborn and think it's the best idea and just doing it regardless and being confident are two separate things. Try and keep yourself in that confident camp. By all means, encourage yourself to hold trades, encourage yourself to run trades and do all that other good stuff, but be very self-aware if you're doing it just because there's no other reason than you're going to do it, and then you might be crossing over into that stubborn line. A link to those guys is in the description below. Bye-bye.